Hey guys, welcome to another Trade Genius podcast. Bob's found a nice graph that gives us a clue about what's going to happen to the overall job market based on a certain sector. So we're going to dive into this video and find out exactly what that is.
Trade Genius.
All right, Bob. So you found an interesting clue in the construction employment data. Clue us in on what's going on there.
Yeah, look, I've probably been beating this with a dead horse here, but I don't think they truly grasp what's happening in the real estate market. Even if, let's assume for a second, prices don't fall for real estate, okay? But what's happening is that the affordability of pricing of the homes means that people aren't buying homes either. And so where the floor falls out, Phil, is in construction. Because if you can't get a return on your investment, as a builder, you're not going to build. And I think we're in that position here before the collapse in pricing, where we basically it's dead. Kind of we talked about how crypto went onto a flat line here. Well, housing just went onto a flat line, and I'm seeing it here because my brother-in-law is a general contractor, and I think you have some insight too because of your family business. And in California here, you couldn't get a contractor to save your life, and now they're all starting to free up. And I think what's going to happen here is that a lot of these guys live hand to mouth too, as you know, especially subs. And so I think, as these jobs dry up, first of all, they're going to have a hard time lowering their prices because they were so used to making so much money, per hour on this stuff, that I think they're going to price themselves out completely, and people aren't going to invest in their homes. I forget if we did a podcast on that, or we're going to do one on where when we go from a seller's market to a renter's market in terms of what people do with their properties, is that they don't put as much money into maintaining the home, and they don't put any furnishing into the home. And that whole industry, basically, those guys are going to get unemployed in a heartbeat. And the weird thing about this is they may not show up in the unemployment stats so much because a lot of these guys are 1099ers, or what I call solo Ks. They're solo employees. They basically just themselves. But you're going to see absolutely a collapse in employment in this industry. And the chart I want to bring up with it is that it has such a profound effect on employment in general. It seems like our country is really built around the housing market. We talked about this before. 30% of half the states in the country's GDP come from housing-related, real estate-related activities. And at the very best, it's on pause, Phil, for the next 12 to 18 months. At worst, we're going to see a pretty good reduction in home prices, which will definitely freeze everybody out. So I think people need to be really, really clear here that we're going into a recession. And I think we talked last week too. We're getting mixed signals here. No, we didn't do this podcast yet. There's the euro dollar is telling us there's no recession coming, but the Fed liquidity and the inversion of the yield curve and construction spending is telling me that we will go into recession. Because the other thing too is the automotive market as well, Phil. And we should talk about that collapsing in sales there too. So, I'll shut up for a second and let you add it because I know you have some insight in this too. But I think people don't realize it's like we're on the beach and we're watching this tide go out. We're like, oh, there's no flood coming, right before the tsunami hits. And I think there's going to be a tsunami of unemployment coming into the spring because these builders aren't going to be hiring people to do housing starts. And a lot of the construction that was being done for remodels, for the pandemic, I think is winding down. So I'll shut up and let you kind of get some words in there.
Well, I think when the funds are flowing, right, and the market either it's organically a bull market or the Fed's producing a bull market, as we saw from 2020 in that panic. what happens is this influx of money ultimately goes into construction because you're building more product for people, or you're having situations where wealthier people are getting second and third properties, right? And I think that goes hand in hand with our boom bust cycles. So I think that's why you see this correlation here. So that's my take on that correlation. Essentially, it's always going to be an integral part of our bull markets.
Yeah, hey Phil, if I could jump on it, because you have some insight here too. In the past, have you seen construction spending and construction employment precede recessions in the past when you were in the industry?
I think that it preceded bullish turns. Okay, so when the market ended, or when the bear market ended, let's say, I think that we started to see, before it was apparent that the bear market was over, we started to see a bump in spending. And the stuff I was involved with was more, it was more like second and third, like vacation type properties, right? But very high end, servicing the one percenters. But you would see a sudden like drop, like when all of the jobs stopped, all of the projects were put on hold, and it just drops off a cliff. So it wasn't so much a leading indicator for the start of a bear market. I think it's if you see that sudden drop off, similar to what you're seeing on the right side of this graph, but you'll notice you'll see these sharp drop offs. So it's not really that much of a leading indicator going into trouble, but coming out of the bear markets, I do find that it is a bit of a leading indicator, because I think the reason for that is the smart money knows first, and they start realizing that it's okay to go back and start speculating, or building that project that they had put off, because they're seeing the flows. Because again, the developers, or even the one percenters, they're dealing with broad incomes, meaning that they're dealing with either manufacturing, or their incomes a lot of times spread the spectrum across the country, and so they're seeing the inflows pick back up. They're putting those inflows back to work. So we do see it as a leading indicator coming out of bear markets.
That's absolutely fascinating, Phil. So basically, the sell-off is confirmation, but the buying could be leading. So we're gonna have to keep an eye on that if we start seeing that, and it's really insightful that smart money kind of knows, because they should know, right? They have lobbyists, they see what the politicians are doing, they know when money's going to flow back in. But well, that's fascinating. But right now, guys, it's really all about I think it's okay to be fearful right now.
All right, guys. Well, that's going to do it for this edition of the Trade Genius podcast. Let us know your thoughts, and we'd love to hear from you. And please hit like and subscribe. It really helps out the channel. And we'll see you on the next one. Take care. Bye.
Trade Genius.